G'day everyone, welcome back to Pete's Investing. Today's April 13, 2023. This is the S&P 500 update. On all three timelines, we're looking at the daily, the 4 hour and the 1 hour. The daily is still in a downtrend, although it's making some slight break up through the moving average on the CCI. On the 4 hour and the hourly, they've been in an uptrend for a number of weeks, but notice on the hourly it's broken down through the moving average of the CCI as well, so possible weakness coming up. Let's drill down on each of these. I'll drill out first. You can see there the CCI has been showing a bearish movement throughout the last, well, almost a year and a bit since that point back there in September 21, and that was early signs before the moving average of the moving average 200 of the price chart showed any signs of weakness. So yes, you may have missed out on some long trades there, but the CCI was giving you some warning signs. So we do follow the CCI predominantly. Now looking forward in a more near term, I've drawn this support line at 38.31 and key resistance at 41.41, and it's been in that range now for a number of months. Now there's also this descending diagonal trend line, and it's been tracking against that as it's been down sloping ever so slightly, but it has bounced off this to the downside off this resistance area at 41.41. So I've got to be mindful of more bearish signals. On the 4 hour chart, I've also drawn this ascending trend line along these bottoms, and that's our support line, so just be mindful of that as well. So if it breaks down through this level, it may track either to the tracking down along this descending trend line, or if it takes to the upside, it may continue tracking to the upside. So but notice on a CCI it's still in an uptrend, although it's starting to level off on the minor moving average on that CCI, the moving average 20. On the hour chart, again, the same sort of outlook. It's in a still tracking upwards on a bullish momentum on the 1 second on the moving average of the CCI, but it may bounce and break to the downside. Now I've drawn this Fibonacci retracement. Now it needs to break our key level of 61%, which is at 39.35, to be more bearish. But just be mindful, if you're going to take a long trade, take very minimal, small positive trades. Don't take large trades. In other words, don't try and get one big leg up. Take small incremental trades if you can, because the price may start to weaken if the CCI continues in its down trajectory further below its moving average. So again, looking at the bigger picture, be cautious about taking long trades. I wouldn't be going short either, but I'll just wait for it to either break to the downside convincingly on the moving average of the CCI to take short trades. Otherwise, I'd like to see it break above this resistance at 41.41 more positively to take long trades, and especially if the moving average turns to the upside on the daily. So to understand how to properly trade using the average down approach, if you get caught out in the opposite direction, reference the links in the description below. Subscribe and like us on Patreon, and see you in a future video.